Hey guys, it's Carter coming at you with a quick market update. It's been a little while, but we're back at it here. Looking at the chart of the SPY, this is the S&P tracker that I use to trade. We're trading at $591, and today I just wanted to give you guys a little bit of insight, the levels I'm watching in the short term and medium term in the stock market on the SPY, on the NASDAQ, and on the Dow Jones. So here on the SPY trading at 591.64, you can see that short term we're in a bullish consolidation pattern here. So since the highs, we've pulled back in an overlapish structure. So this is not impulsive price action to the downside, indicating to me that this is corrective. And corrective pullbacks mean we have to be open to the idea of much higher prices to come. So I do believe that is the case. I believe we are going to continue to see higher levels on the SPY here. And yeah, this pullback has scared a lot of people. We have had a pullback that has invoked some fear. However, the fact that the price action is looking corrective is a great sign that we're going to see some more upside. Another thing I want to note is that when you see these cross ups from below the trigger line on the MACD on the daily chart, typically some of the best times to buy here in August, we saw this cross up, and look at that, one of the best times to buy. And look at that, we're looking and flirting with a cross up here on the MACD's daily chart right here in this bullish consolidation pattern. Mind you, we have not broken out, but this is bullish. The price action is corrective to the downside, and we have high probability of seeing higher prices in the weeks and months to come. Now, if we do break this consolidation pattern, we have a little buffer here at around the 565 level. If we break that, then it could get ugly. However, we right now are in a great spot on the SPY. All right, so now we're looking at the weekly chart of the SPY, and if you look at the bottom of the screen, the stochastic RSI right here, flirting with a momentum cross to the upside, which is bullish for the next couple of months potentially. And look at that. That aligns with the daily chart being bullish as well. So yeah, in the next couple of months, don't be surprised if we make all-time highs and rally into this really strong resistance level. This is multi-year long resistance, and it should come into effect at around 635 to 640. This is an upsloping line, but make no mistake, this 635 to 640 level could be a really big test for us. These upsloping channels tend to break to the downside more often than not, and we are in a massive upsloping channel on the SPY. So although we are looking quite bullish for the coming weeks and months, possibly that is short-lived bullishness. So I don't think 2025 is going to be some rip-roaring year that many people are talking about it being. I think it is going to be a journey to the top of the market, which is not that far away, some distribution, and then a big crash heading into 2026. So right now, we do look good for the couple of months to come. But make no mistake, we are closer to the top of the market than we are to a bottom of the market. And the 3-month chart of the SPY now, you can see that this 5-wave move that I'm tracking right here, we're in this 5th wave, and we're in this 5th wave of this 5th wave. That's what I have us in. And also, look at this bearish divergence on the weekly chart. The last time we saw 3 hits of a resistance level, bearish divergence right here. And this 3rd hit right here was the top of the dot-com bubble before 10 years of devastation. So that is what I'm tracking right here, potential major concerns. So yeah, we're seeing some similar patterns play out. We have to be careful. We have to be cautious. We're overextended. We have been in a really long-term bull market here, and unfortunately, we look overextended. And if we're looking at the data, looking at the charts, looking at the technicals, yeah, we see the divergences in these longer term charts. And yeah, I think we're nearing a big mean reversion move. And now we're looking at the QQQ daily chart. This is my NASDAQ tracking ETF trading at $513. And on the daily chart here, you can see once again that we've been channeling to the downside in the last month. And yeah, once again, very overlapish, very corrective looking price action, indicating that it is probable we are going to see more highs on the NASDAQ. So where could this next move take us? Well, if we zoom out here, you can see how this resistance level has been a challenge so far. It's been a little bit of a pesky one right here, but it is more of a short-term level, and it is at around 550. So we'll see what price action looks like at 550. We might get above that. I think we might head a little bit above 550. Let's zoom out, look at the monthly chart here though. Monthly chart of the QQQ here, really speculative, really dangerous. I just want to make it clear that it is really dangerous in the years to come. So you can see this is another long-term upsloping channel, and these typically break to the downside. So yeah, be careful. This is not a pretty long-term pattern that is forming right here. And you can also see, if we zoom in, a really devastating reversal candle. So near the top of the channel, we have printed a gravestone candle. So a gravestone candle at incredibly strong channel top resistance. So it's this candle right here that we printed in December with the long wick to the upside, little to no body at resistance. So although you do tend to see, when you see candles like this, candles that close like this, they never close above the top wick here, and that would be above 540. Don't expect to end a month on the NASDAQ above 540. It could happen, and that would potentially negate the bearishness of this candle, but right now this is a reversal signal. You have to watch that. However, I'm also thinking that you could wick above 540 and head to the top of this parallel channel in a really short-lived move to the upside. So although I do see some resistance at around the 540 to 550 level, I do acknowledge that we could possibly head towards the upper end of the 500s on the NASDAQ here. All right, and now we're looking at the final chart of this video. This is the Dow Jones Industrial Average, trading at 43,150. And I actually thought it had the best setup out of all the charts in this video that I'm showing you. I thought it had the best setup because of the channel bottom right here that we headed down into, amalgamated with this trend line cutting through these highs right here and these lows right in here. So we looked for a bounce and we got that bounce for sure, but we could possibly head to the top of the channel, which would bring us into the upper 40,000s here. So on the weekly chart of the Dow Jones right here, once again, we're looking at a really ugly upsloping channel, not a pretty long-term view right here on the Dow. However, it still says we have more upside. So if we do head to the top of this channel, it would be in the upper 40,000s, possibly towards 48,000. So to conclude this video, I don't see any signs of an absolute market cycle top here on the SPY, NASDAQ, or the Dow. However, we need to continue to keep the long-term charts that look incredibly bearish and incredibly dangerous and incredibly scary in the back of our minds. However, the short-term charts right now are signaling more upside is to come. And we have to use these short-term charts to tell us when the long-term charts are likely about to kick in. So yeah. Right now, the short-term charts look entirely corrective to the downside. We're looking for a move up in the coming months, but keep in mind, we're near the top of the market. All right, that's all I have in this video. Have a good one. Stay safe.